Yo, Market Scraper here. In this video, we're talking about why it's hard to buy a stock and then add to it after it goes either down or add to it when the stock starts to go up. And two big things I look at when I pick stocks. And if you haven't yet, don't forget to smash that like button. It really helps with YouTube algorithm to help other folks see this channel. And if you haven't yet, smash that subscribe button. Really appreciated. Okay, now let's jump into this. So in my last video, I showed the purchases I made in Tesla stock. Don't forget to check out that video over here. And here's a quick screenshot here, and shows the purchases of Tesla stock that I bought. I started a position when it was, not at its lowest point, and I kept averaging in the beginning, and then I started averaging down as the Tesla stock declined. And that was, for me, I love averaging down on a stock that I really believe in and like. So what are the difficulties that folks usually have when a stock starts going down? When a stock starts going down, you usually have the fear that a stock might go down to zero. It might just keep going down. You might continue to lose money. And so you might get frozen and not be able to keep buying when the stock goes down, even though it's a really good opportunity for you. So that's a big factor of why it's so difficult to continue to buy a stock as it goes down. And for me, why is it so hard to buy a stock when I start a position and then the stock starts to shoot up? For me, it's hard to keep adding to that position. And let's look at McDonald's recently. So McDonald's recently hit $189, and that's where I started to start my position there, actually. So I was never in McDonald's yet, and then I started adding to that position. So why is it that after McDonald's started going back up again, then it went down to 192, added some more positions there, and then it's just gone up since, and I haven't been able to add more to that position. But why not? If I'm starting a position now and I really believe in the stock, wouldn't I want to buy more at this price? So that goes into the two main things that I look at when I purchase stocks. I look at the fundamental analysis of the stock and what I think that stock is actually worth. The second thing I look at is the technical analysis. What is the trend that the stock is going in? Where are the buyers jumping in? Because if I was interested in McDonald's when it was at $220, why didn't I buy in there? If I thought the stock was going up more, and I think that stock's going up to like 300 or something, why wouldn't I buy it there? And why would I buy it on like a $20 pullback? Well, actually, so on a fundamental analysis and the valuation of the stock, I would want to buy the stock at around 160, 150. So I think McDonald's is richly valued right now. But then why would I jump in the stock at 189? See, that's where also the technical analysis comes in for this stock to me. If you look at this chart here, these are when the buyers jumped into McDonald's. And so I thought buyers would jump into McDonald's around this 189. And for me, I started a very small position there. And then if buyers didn't jump in there, I would want to continue buying gradually. And if it got down to, my 160, 150, that's when I would start buying heavily. But I will also continue to buy the stock when I think the buyers will start jumping into the stock, because the stock might never see 160 and 150. We don't know. I don't know. We don't know until it happens. So those are the two things I look at. And so I will continue buying McDonald's stock when it starts to go back, if it ever hits this line again. And this is why it's so important to look at both fundamentals and technical analysis, in my opinion, because if you have a stock that's so richly valued, and I like the term richly valued more than overvalued, because it's hard for me to say if it's overvalued and then it keeps going up, right? So let's say richly valued, then the fundamentals would say maybe don't buy this stock. But then if you have look at the technicals, then you can see that the stock is being bought here. It's still being bought, and then that's more reason to buy that stock. And if you were just looking at fundamentals alone, it's hard to buy a stock that's so richly valued. And that's why I see both fundamental and technical analysis be used together to be such a powerful tool for an investor to make the right decisions to buy stocks that reach that fundamental valuation of that stock and buy in it hard. But when you have a stock that's really richly valued, you can still buy into that stock based on the trends of other buyers. Another stock that I want to buy more of that I had a hard time is Abbvie. I really believe in this stock and I want to buy more shares of it. But Abbvie is an interesting scenario where I think the valuation is at the right price, and I also think the the technical analysis looks pretty good as well. So Abbvie, I started adding in the $70 range and added more in the $60 range, but I wasn't able to buy too much more of the stock because the stock just started shooting up. But I still think Abbvie isn't overvalued, and I think it's still a fair price. So it's one stock that I'm starting to add more even today at its high valuation comparatively to just several months ago. So we'll see how that plays out. I am adding more shares now, and but it's kind of like trying to forcing myself to add more shares because it's tough. But why is it so tough? What is the psychological reasons that make it tough for us to add more shares? Well, if we have a nice cost basis, it's so pristine. We have this $60 Abbvie or whatever price you might have got it at, and do I really want to stain that perfect cost basis by adding more at $90 a share or whatever price it is now, and making it $70, $75 cost basis? Well, if you believe in the company, and if you really believe in that it's going to go higher, and also the dividend yield that it currently gives out, even if the stock doesn't go up so high in the 5 years, 10 years, you know that you have that huge yield that comes in for Abbvie, and that's going to make a lot of money over those years. And for me, it's kind of a joke, but for stocks I love, even though it's not something that I would do now, it's almost advantageous to buy a stock when it's pretty high and then keep averaging down as it goes lower and lower. And I've been just adding more shares lately just because I'm trying to force myself to add more shares in companies that I truly believe in, like Disney and Johnson & Johnson. I bought into them not when they're super low or anything, but they both had a decent uptick since when I bought them a few months ago. And I've been trying to add more to both of those positions because they are both stocks I really want to own more, and I'm really motivated to build out those positions. Let me know which you prefer and which weakness that you guys might have. If a stock goes up, are you able to buy more shares of that stock? Or if that stock goes down, are you able to buy more shares of the stock easier then? What things do you put into place knowing your weakness that helps you avoid that? Because it's really good to know what our limitations are and what areas we might need to work on. And I mentioned before, but what happens for me is when a lot of my stocks are overvalued, I still want to be investing. So if I am unable to buy individual stocks because they all seem overvalued, I will just ramp up my 401k and things like that just get automatically distributed from my paycheck. And that way I don't have to look at it, don't have to think about it, and live off of my savings until there's deals in individual stocks I'm really interested in. And so that's something that I use, and let me know if you have any other strategies as well. Well, I hope this video was interesting, and just a friendly reminder, I'm not a financial advisor. These videos are for your entertainment and informational purposes only. Thanks so much for watching, and I'll see you guys next time.